Welcome to the Commercial Property Podcast. My name is Suzi Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.suzicarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode. Welcome back to the Commercial Property Podcast, and today, as a bit of a festive theme with the 12 days of Christmas, we're going to talk about the 12 myths of commercial. So slightly tenuous festive theme, but hopefully it'll be valuable nonetheless. So when I speak to business owners, or I speak to pension investors or residential landlords that want to get into commercial, I feel like sometimes there's quite a lot of fear of the unknown, fear of perhaps some things that don't actually need to be feared. So I thought it would be quite useful just to run through some of the more common myths that I come across, and try and give you the counter argument to them, because at the end of the day, any new strategy, any new investing strategy in particular that you do, it's going to feel a bit intimidating to begin with. You're going to need to get some knowledge, and so it's only natural to be, in fact it's absolutely quite right to make sure it's the absolute right decision for you to get into, that you get the right knowledge and you get the right information and the right help for you to invest. But ultimately, I think there are myths that maybe just don't need to stand in your way as blockers. So let's get going. So the first one, I think, is that the first day of Christmas, or the first myth of commercial, is that commercial's only for big players, and that it needs millions to invest in. You really need to be one of the big pension funds or the big property companies, and that really couldn't be further from the truth. If you look at some of the portals, even in the southeast, actually, property is obviously much more expensive than some parts of the country, you can see that actually there are properties are well under £500,000. In fact, you can find properties for £150,000 or more, sometimes less actually. And that's because we are in a buyer's market at the moment. We have been for the last 2 or 3 years. The market has fallen, and it really is a time for picking up some really good value properties, because when the market recovers, which it will do at some point, then obviously we'll all look back and think that it was a great time to invest. So times like this are full of opportunity, but it doesn't have to be kind of tens, hundreds of millions. When you invest in commercial, it can be exactly the same price as residential. In fact, sometimes less than residential. Obviously, if you're buying slightly cheaper properties, you need to make sure you do your checks and balances, making sure that you have done your due diligence, and making sure in particular that you can let the properties, you understand kind of the lease lengths and some of the risks associated with them. But there's lots of properties out there where the potential hasn't been exploited, lots of badly managed properties where you can pick up bargains and you can add massive value. So that's the first myth. It doesn't need millions. You don't need to be a big player to get involved. The second myth of Christmas, or the second myth of commercial, is that if you're starting out investment, you should start in residential and move on to commercial. Now, commercial is without a shadow of a doubt different than residential. Of course, we all live in homes. We all live in a house or a flat, and so we understand it. And so inherently, we understand that if you do have a new bathroom or a new kitchen, that actually then and an extension perhaps, and do a bit of a refurb, then you're going to get better value. Bricks and mortar value in that residential property is going to be better. So I guess residential is more accessible from that point of view because we understand it. But from a technical point of view, yes, you've got commercial leases. Yes, commercial performs differently, all over the place, whereas residential is the same. But once you get under the skin of commercial, it doesn't have to be a barrier. It is actually really straightforward. And when you've bought commercial and you've added value to it, then it can be much more straightforward because you're not being really bothered by tenants. You have hands-off income most of the time, and therefore it can actually be a better source of income and more hands-off than residential. So don't feel like you have to start in residential first. Many of you listening to this will already be residential landlords, but you don't have to do that to move into commercial. You can move straight into commercial investing, and you can get commercial finance even if you're not a residential landlord. So so don't see that as a barrier to your commercial investing. The third myth of commercial is that there's tenant risk. There's potential problems with tenants. You're worried about getting tenants in properties and them staying. Well, at the end of the day, you do need to understand the type of property that you're buying. You do need to understand tenant demand in your market. And frankly, you'd be pretty naive to buy a commercial property if you didn't understand that. So from that point of view, if you're buying a property where there's a lot of risk, tenant risk, then and you haven't done your due diligence properly, then that is a risk, of course. But the name of the game is that we niche our strategies, we niche our commercial property investing, which means that we buy in areas where there's good tenant demand, where we can maybe alter the property to add value, where we can re-gear leases, reconfigure space to make it more attractive to tenant markets. And the other thing that we do that I think is really underrated, but is such a simple process, is to review portfolios, because in commercial in particular, then areas change, sectors change, and so you do need to regularly review your portfolio. So yes, there is tenant risk. That there is always tenant risk with commercial, but you can mitigate that risk substantially by doing your checks and balances before you buy the property. The fourth myth of commercial is that commercial property is really, really complicated. Now, this probably goes back to what I was saying about the big players and you needing millions, is that anything is complicated when you get into it and you don't understand it, but you just need some really good knowledge to understand it. But once you have that knowledge, nobody can take that away from you. And so it's just a process. It's a process like if you were going to invest in stocks and shares or crypto. You don't just bumble in. And well, you shouldn't just bumble in anyway. Some people do, but you shouldn't just bumble in and invest without having at least some knowledge. So yes, you do need to understand how to read a commercial lease. Obviously, that's something I work with my clients on. You do need to understand how the market works. You do need to understand how to add value. But once you've got that knowledge, you've got it, and you can apply it to lots of different types of property. So it's not overly complicated. And in fact, the fact that you can do paper-based asset management in commercial property means that actually, you don't need to do complicated refurbs. You don't need to deal with builders a lot of the time. You don't have these cost and time overruns. And so sometimes it can be a lot less complicated because you're doing paper-based asset management rather than doing physical works to properties. So definitely a real myth that needs to be busted, that one. Number 5, the fifth myth of Christmas, or the fifth myth of commercial, is that the market is too uncertain right now. Now, there obviously is a lot going on. I think as a general summary of the way the world is at the moment, there's a lot going on. But that's really good news. Where there's problems and opportunities, it can be really good news for investing, because where there's uncertainty and where there's problems, there's opportunity. And that's the way we like to frame, or I like to frame these times, is that uncertainty breeds opportunity. And so, yes, we have a worldwide, a global context of unsettling conflicts and leaders, etc., sanctions. We've got a government that isn't breeding confidence into markets, and obviously that's a problem because that's making bond yields stay high, and therefore commercial yields won't fall when bond yields are still high. We've got, and obviously the interest rate environment is affected by inflation, cost of goods. So yes, there is a lot of uncertainty. The other thing to say is that when I started out in commercial 30 years ago, every single type of commercial would let. You'd get 20, 25-year leases on them. In fact, I remember we were horrified when you could only get a 20-year lease rather than a 25-year lease. It was almost like, what's happened to the market? But actually now, of course, you've got some sectors where you can get 3-year leases, some sectors or types of property where you can get 20-year leases or 15-year leases. And so that there's a lot more nuance and a lot more skill that you need when you're commercial investing. So it's just a case of understanding that. But where there's uncertainty, there are opportunities. And of course, if you're feeling a little bit uncertain or you're feeling a little bit worried, then vendors are too. And so that breeds motivation in sellers. It breeds a willingness to look at lower pricing or to offload properties quicker. We certainly see those peaks around just before the budgets, or just before end of year. So motivation is good from vendors because it means that we can potentially find properties for lower prices. And the number one rule of doing a good property deal is to buy it for the right price, because then you can add value without feeling the pressure of having paid too much. So yes, the market is definitely uncertain. I'm definitely not refuting that, but it can be a fantastic opportunity if you frame it that way and undertake the right steps to take advantage of that. Number 6, the sixth myth of commercial is you need lots and lots of specialist knowledge to negotiate with tenants and to negotiate with owners. And at the end of the day, you do need some knowledge. Yes, absolutely you do. But really, a lot of this kind of the people skills you need to negotiate with agents, vendors, tenants, they're just general people skills. It's about building rapport. It's about understanding problems and looking to solve them. It's exactly the same way that you approach residential as well, albeit it's a different type of product. It's a case of just understanding the motivation of sellers, of tenants, and making this a win-win if you possibly can, doing ethical investing. So some specialist knowledge can help, of course, because you can, you're going to need to know potentially how to structure heads of terms and to structure a new lease or whatever else. But ultimately, it's people skills that you need. And, they are the same whether you're negotiating a residential deal, whether you're negotiating a commercial deal. It's about building rapport, it's about building relationships and solving problems. And ultimately, that's what we will do. Number 7, the seventh myth, is that banks don't like lending on commercial, or you won't be able to get commercial finance. Now, that couldn't be further from the truth. Many of you will know that Callum Brooks, who of Bond Finance, who sponsor this podcast, I recommend very highly. And Callum will tell you that anybody can get commercial finance, genuinely, as long as you haven't got a criminal record or whatever else, then most people can get commercial finance. And so what depends, what is dependent on experience levels is whether you've invested before, whether you've got commercial experience, etc., etc. Banks do like lending on commercial. In fact, there's certain types of property that banks are desperate to lend on, but that is the skill. And actually, that is the game. And you'll have heard about that in previous episodes of this podcast, where there is a bit of a game to play with commercial finance, because there's certain types of property that banks really like. So they really like industrial, they really like multi-let. If you can find industrial multi-let, they really, really like that. But they also like, they like the lease. If there's a good lease with rent reviews and, decent length on it, then they like that. They like properties with a good tenant, or with a good story, or with a good asset management play, or whatever else. But it's your job, not the bank's job, to be convinced or to convince the bank that actually this is a great property to lend on. So for the right property, you can get some really good rates now. Go back a couple of years, we were talking commercial rates of like 10%. Now they've come down to 8%. But for the right property, you can get rates beginning with a 7. And if you do mixed use property, a blend of residential commercial, you can get rates potentially beginning with a 6. It's about understanding the commercial finance market and learning how to play the game. And, if you want to listen more to that, I have lenders who come on this podcast. I've got brokers that have come on this podcast before. So go back and listen to some of those episodes, because there's very definitely a game that you can play. So it's definitely a myth that banks don't like lending on commercial.
This episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
Number 8, commercial property values go down. So a myth that, commercial properties are going down and therefore there's nothing you can do. Now, this is an interesting one, because ultimately any fool can add value, or any fool can gain value in a rising market. It's easy. You buy a property, you don't really do anything to it, it just grows in value. And that's not really good investing, that's just luck. Obviously, we all need a little bit of luck in our lives, and I'm definitely not knocking it. But in the market like we've got at the moment, where it's relatively stagnant, potentially may even go down next year in 2026, then what you need to do is you need to force value through. This market is all about forcing value through. Now, obviously, you can buy in commercial and just park cash in it, and that's fine, but you need to park cash in properties with long leases with good tenants. Otherwise, you need to force value through, so that could be through your asset management, pre-letting, re-gearing leases, re-letting. And when you actually force appreciation through, you can actually get that value quicker than with residential. Because if you think with residential, what you're having to do is you're having to maybe do an extensive refurb or an extension or new kitchens, bathrooms to actually add that value. With commercial, you can re-gear a lease, just let a property to a new tenant. One of my clients is buying a property and he's already let a vacant commercial unit in the property that he hasn't even bought yet. That's a pre-let. And so he will basically buy that property. He's let it within 6 weeks. And that property had been vacant for months and months, but he just approached it differently because we're working together. He understands how to market that space. And he's now going to be able to show his valuer that actually he's added loads of value by getting that vacant property let. He's forcing the value through. So you can get the value through a lot quicker, and you can get a lot quicker, a lot bigger value appreciation than you can get in residential very often. Then number 9, I think we're on the 9th myth of Christmas, or the 9th myth of commercial, is that that voids will kill you. So if you've got a vacant unit, you're paying business rates, you're paying void utilities, then it's going to be a nightmare for your investing. Now, obviously, nobody wants a vacant unit. That's not the name of the game with investing. But ultimately, we deal with this up front. It is sometimes, tenants leave and that's unexpected. But when we're doing our due diligence in terms of what investments we're going to buy, what areas, what sectors, we want to niche our strategies. And the reason for this is because there's so many different types of commercial real estate that actually, if we niche, we can find areas where we know there's good tenant demand, where if a unit becomes vacant, we know that we can re-let it for good rents. I've just been speaking to a client who's bought a property in a really, really great southeast town. He was going to do a residential conversion on a commercial property, and since he's been working with me, he's realised actually he can make as much money from commercial as from doing a resi conversion, and I hear that a lot from a lot of clients. And the thing about that is that he's got a vacant property, but he's kind of pivoted to commercial. He's letting it really, really quickly. And so he's bought but the fundamentals of that property are right. He's bought in a great town with great tenant demand. And so whenever you buy anything, it's always about having multiple exits. It's about doing your due diligence on tenant demand, and not just kind of, are the people to take this, but what lease terms would they take? What lease length would they take? What kind of rents would they pay? What kind of tenants am I going to get? Am I going to get a brand, or am I going to get a local operator? So, there's nothing should come as a surprise for you. And of course, going back to what I said previously, is you need to monitor your portfolio on an ongoing basis to make sure that that markets don't change, because markets do change in commercial. You only have to look at what happened to retail during COVID to see that markets change. And it's about trying to, once you get your eye into commercial, we knew that was coming. I worked in retail in the corporate world. We knew that retail was on a downward spiral since probably 2013. So you can hide your head in the sand and ignore it, or you can try and foresee this kind of stuff, maybe sell out some of your portfolio. Now, that's not to say, by the way, that some retail's not doing really well, because it is. There's certain niche locations, and a lot of niche locations across the UK where retail's absolutely booming because there's the right demographics, the right supply-demand tension. So it's all about doing that upfront research into your niche and making sure that you absolutely understand the supply and demand for the properties you buy. Like, you shouldn't, nothing should be a surprise when you've bought the property. And of course, there's a process you need to follow to do that. Number 10, the 10th myth, we're almost there. So commercial property tenants don't pay on time. That's an interesting one. I've heard that a few times. So the thing about commercial property tenants is they're businesses. So you can do checks on businesses pretty easily. So you can look at previous year's accounts. Obviously, they're a startup. You need to get personal guarantees, for some SME type operators. But the other thing is that tenants will pay monthly or quarterly in advance. And it's very rare, actually. You do get tenants that don't pay, of course, just like you get residential tenants that don't pay. But the difference in commercial is, as long as you've got the right lease drafted, which, so you need to get solicitors to draft your lease, then you can remove non-payers, persistent non-payers of rent very quickly. You can just send the bailiffs in to change the locks. That's obviously a very, very different process than you have in residential, where you have to go through lengthy court processes. So it's actually easier to get rid of non-payers than it is in the residential world. So that's an absolute myth in terms of commercial tenants. Number 11 is that you have to manage commercial yourself. Well, there's plenty of managing agents to manage commercial properties. So the biggest tip I can give you is, when you're looking at commercial, have a think about whether you want to manage it yourself. If you don't, which a lot of people don't, then speak to local commercial agents. They will very often have a managing agent arm. So they'll have, investment surveyors or letting surveyors, but they'll also have management surveyors. And those management surveyors can not only kind of do all the maintenance on a property and, manage the tenants, collect the rent if you want them to, but they can also do rent reviews and lease renewals as well. So they can manage the whole shebang for you. So it's an absolute myth that you have to manage commercial yourself, because actually you don't have to. There's plenty of people that can help you. So just find out the really good local agents, and kind of you can work that through. And then the 12th myth of commercial is that it's too late to start. Really, genuinely, it couldn't be any further from the truth. Whether you're a residential investor that wants to move into commercial, whether you're a business owner that wants to move money into commercial, whether you're a young investor and just want to get started into commercial, it's never too late to start. And I have to say, 2026 is going to be, I think, a really interesting market, because we're still in a down market. I can't see that changing anytime soon. And there's so many opportunities out there. I think that a lot of vendors have been holding off to see whether the market bounces back, and it hasn't done that. And so I think there's going to be a lot of commercial sellers who just decide to sell in 2026. And obviously what that means is more deals on the market and potentially better deals out there as well. So, it's genuinely not too late to start. It's no matter what age you are or what level of the process you are. You haven't missed the market. You never miss the market. There's always great deals out there, and you just need to work that through. So the 12 days of Christmas, the 12 myths of commercial, slightly tenuous, but hopefully that's been kind of a useful summary into some of the myths of commercial. And hopefully, you can see how they are genuinely myths and they are not. They're not kind of legitimate concerns. And given this is my last podcast before Christmas 2025, I know some of you will be listening to this way after then. So apologies for the festive reference, but just wanted to wish you all an incredibly happy Christmas. Thank you so much for listening to the Commercial Property Podcast for the last year. We're well over a year in now to the Commercial Property Podcast. And, if you do like it, please do hit subscribe because it really gets our listenership up. And I'm so grateful for you being here and listening to me every week. So have a wonderful, peaceful and happy Christmas. And I look forward to seeing you in 2026.